the MHA Spring Statement 2022. This afternoon I'm joined by my fellow partners Tony Metcalfe and Patrick King. We're here to discuss the latest announcements that Rishi Sunak stood up this afternoon to let us know his thoughts. He's obviously had a really challenging time coming in to be the Chancellor just before a global pandemic and now a war in Europe. So I think there's quite a lot of pressure on him today, particularly with the cost of living pushing and everyone feeling it in their pockets. Patrick, how did you feel the statement went?
Well, I think we were all kind of expecting it to be less than it was. I think it's a fair thing to say. There was more in it than we were perhaps expecting. Some reasonably positive things. I think there are some attempts to help people a little with the cost of living crisis, which is a big story, of course. And he has done a few things with business. So, yeah, on balance, I'd say it's fairly positive.
And Tony, I think the cut in income tax was a bit of a rabbit out of the hat at one point.
Yes, I mean, he had to do something. As Patrick said, he'd been under pressure, really, to address the cost of living crisis. So he'd made an announcement in relation to the national insurance, but at the other end of it, he wanted to strengthen his credentials of being a chancellor of lower tax, and therefore gave an idea that income tax was going to be reduced before the next general election in 2024. So that was the rabbit out of the hat at the end, yeah, definitely.
Of course, we don't know what the tax bands will be for this change in tax rate when it comes around. Hopefully, it will be the benefit people are expecting.
Yeah, I think he mentioned that it was the basic rate tax at the moment and reducing that to 19%. So I think it's going to be the bands that we expect, bearing in mind that we know that all the bands are going to be frozen now for the next 4 years anyway. So I think it was a clear indication that lower taxes for those people in work and obviously those people with investment income are also coming forward.
Yeah, hopefully the pensioners will certainly feel it, because I suppose one of the things that wasn't mentioned today was the pension triple lock, which was rumoured, of course, in the press. And would there be an announcement? We didn't see any of that.
No increase in pension announced or anything changed there. So yes, I guess there's no money left.
Maybe more to come in the autumn. I suppose from a tax perspective in our jobs, huge potential announcement with his tax plan that's been announced. I expected, I have to say, to see about 80 pages when I clicked on the link on the internet. It basically doesn't say much more than he said in the statement, I don't think. So we probably can't be too insightful with our viewers today, but I suppose it's thinking about modernisation, reform, simplifying the system, and we know there are apparently over 1,000 tax reliefs that us guys need to know about, and we use on a daily basis that are now up for review. Our advice to clients, I suppose, over the next few months with this kind of hanging over us, I think we need to be a bit of forward planning, Patrick.
Well, it's always the case, isn't it? Yes, and we've got various things that he's announced that are likely coming up. We've talked already about the income tax cut, which we're expecting in a couple of years' time, with a bit of luck. And that's because we just wait for that with bated breath, I guess, rather than make too many plans for it. On the business side, there was some consultation now, some capital loan sounds quite interesting, potentially quite significant changes there with an increase in the general rates of allowance given, new first-year allowances. I think I saw an increase that you get more than 100% of the cost on some of them as well, which sounds quite good. He also said that the AIA, which is currently at $1 million, that's going to carry on at $1 million for an extra few months. Can't remember precisely how long it was, but it's carrying on for a bit longer.
Yeah.
Next year, I think.
April 23, I think, yeah.
Yeah, so that's welcome. But there was also something in the consultation side suggesting that the general rate of AIA will be increased to $500,000 from what I think is it 200,000, the basic rate at the moment. So if I'm right on that, and so that's quite a big increase as well, which we're looking forward to. But we don't know when yet.
Yeah. I mean, I still feel with some of the encouraging investment was something that he seemed very focused on, and businesses to invest. I suppose we see in our client base, clients have been through a tough time of it. They might be paying down their CBILS loan now. A lot of them are doing very well, but they're running a very lean ship. And perhaps the banks are a bit cautious about lending. The European situation as well, off the back of the pandemic, how confident are they to invest? And the changes to R&D, Tony, and the investment allowances, they sound great, but I wonder how far he needs to go to really encourage businesses to put their hand in their pocket and take a leap of faith.
Yeah, I think that he's trying to look forward beyond 2023, which is where all the changes to allowances were coming in, and obviously the consultation you just mentioned, R&D, try and broaden the reliefs, actually maybe increase the reliefs, trying to reduce that productivity gap that we have with other OECD members. I mean, obviously, a lot of businesses are struggling at the moment. If they do want something, then they've got to order it and actually get it delivered and or get built. So I think that he needs to provide, which I think he's trying to do, some long-term indications as to what allowances are going to be. You know, Patrick just mentioned the annual investment allowance. He mentioned that it's not going to keep going up and down. It's going to be a lifetime allowance, effectively, in his words. So it's long-term surety for businesses that they want. They just want to know what's happening. And again, in particular times, it's particularly worrying, isn't it?
Yeah, I mean, we've all seen the Office of Budget Responsibility. They're struggling to predict what the economy might do next year, given the volatile situation we're all in. But, you know, employers, they're facing perhaps 5% wage inflation this year. You know, we've got the massive resignation that's talked about all the time, people changing their minds about the sort of roles they want, where they go. Sometimes for many clients now, it's actually not lack of demand, but it's the ability to deliver their products is a real challenge. And I suppose we also mustn't forget that we need that in the context of corporation tax rates, which we already know are going up, and maybe this would soften it.
I think so, yes. And it's interesting that obviously we've had the hike in national insurance, or I forget the name of it, the increase in the health and social care levy going up by 1.25%, and there's been a lot of fuss, particularly from the opposition, to reduce that and just admit it was the wrong time to do it. When you add up the various changes announced today, including the tax cut, in a couple of years' time, it more or less cancels it out. So if you're looking at it cynically, you might say he's agreed it's the wrong thing to have done, but he won't admit it, so he's doing something else. If you look at it less cynically, what he did was perfectly right, because he's ring-fenced a bunch of cash for the NHS. I think is what he was kind of trying to say. And I have some sympathy with that, but you obviously, depending on your political persuasion, you might go one way or the other.
Yeah. And I suppose the other big area that touched on today, you know, it's all connected to fuel, but energy and investment. You know, we've seen lots of our clients over the last year or two, the last 5 years really, investing in more renewable, energy efficient matters for their businesses. And of course, many of them now are required to report on their renewable policies. Do you think what's been put there today is going to be enough to encourage people to sort of go green, and for households as well?
Well, there was additional relief available for expenditure on people's houses for insulation, etc. So there was that. I think he's probably tackled more immediate issues today. I mean, like, for example, the increase in the costs associated with gas and oil and so on. So, you know, he mentioned the 5p cut in the duty for petrol. So I think that probably goes against the green credentials, and it's just maybe trying to just deal with here and now at the moment, and just trying to help people through and make the big announcements, the more structural announcements in the autumn budget, which probably was his hope and expectation before the politics got in the way, I think.
I think the whole renewables piece, there's going to be more to see there, and we're certainly, you know, for the standard household, it's a big jump for them to make those changes, but something that we all know we need to do. And given the Russian situation, to overall reduce our energy usage is obviously going to be a big target for us. So certainly heading at the renewable sector here, I look forward to seeing what may come out in the autumn statement. I suppose on the general family sort of side and owner-managed businesses, because of many of the tax reliefs that are in the are in the new tax plan potentially going to be affected or could be. We had I think, did you say, Tony, we were talking earlier, it was 2019 where we had the last global announcement of we're going to review all the taxes pre-pandemic.
Absolutely, yeah, July 2019. So I think it's been effectively shelved for the last 2 or 3 years. I think comments made back from the current government is that they're probably not going to take that any further, although the opposition benches may well do. So I think like forever, always look at the current taxes and the reliefs that are available. Make sure that they obviously speak to ourselves as our advisors, because there's no better time to tackle these things and think about tax planning initiatives for our clients now. Really, I think that's what would be my message, certainly.
I think that's a really good statement, and now is the time. We know what the reliefs are, we know we can plan around it, and I think good tax planning these days is really planning ahead and having a strategy, and certainly in the next 6 months it feels like we're maybe on a bit of a cliff edge as to where tax reliefs are going to go, and there'll obviously be certain eyes looking on elections as well, so it's always important to keep that in one's mind when you're thinking about structuring your affairs. There's certainly more that we can add to this, and you'll find more detail from us on the MHA Hub, so please do log into that, and of course at any time you can contact us online and send any questions over. Thank you.